Welcome to Unlocking the Upside, where we go deep on the fundamentals that drive markets. I'm Jeff Robinson, founder of theinvestmentanalyst.com, and I've spent decades helping institutional investors cut through the noise.
And I'm James, former buy-side analyst and Jeff's reality check. Today we're digging into a real heavyweight match, Microsoft versus Apple. Why has Microsoft pulled ahead, and what can DCF models teach us about who really deserves to be on top?
Exactly. This isn't just about who's got the bigger market cap. It's about how clean your model is, how consistent your reinvestment logic is, and whether your terminal value is really just smoke and mirrors. The battle between Microsoft and Apple isn't just about market caps. It's a $5 trillion chess game that's reshaping how we think about business resilience and technological dominance.
That's such an interesting way to frame it, especially when you consider how differently these companies approach their core business models.
Let me break down something fascinating. Microsoft has transformed itself so completely that over 70% of its revenue now comes from recurring subscriptions. That's like having a guaranteed paycheck versus hoping for a big commission.
And then you look at Apple, still generating half their revenue from the iPhone. It's remarkable how tied they are to that single product line.
Here's what really gets me excited. Microsoft's Azure platform isn't just another cloud service. It's becoming the digital backbone of global business, woven into everything from Office to GitHub to AI services.
The market certainly seems to be betting on that vision. How does that compare to Apple's innovations?
Well, look at the numbers. Microsoft's gross margin is sitting at 69%, while Apple's is at 44%. That's the difference between selling software and selling hardware, even really profitable hardware.
Though I have to point out that 44% margin for a hardware company is pretty extraordinary.
You know what's really telling? The way these companies use their cash. Apple has spent hundreds of billions on buybacks, while Microsoft balances between dividends, buybacks, and heavy R&D investment.
That different approach to capital allocation really speaks volumes about how they see their future opportunities, doesn't it?
Exactly, and here's where it gets interesting, Rizu. When Apple focuses heavily on buybacks, it might suggest they see fewer internal investment opportunities. Microsoft's balanced approach hints at a company that still sees plenty of growth runway ahead.
Though we should probably acknowledge Apple's incredible ecosystem advantages. Their customer loyalty is unprecedented.
Let me put that in perspective. Apple's ecosystem is like a luxury gated community. Once you're in, you probably don't want to leave. They've created this seamless integration between hardware and software that Microsoft can't match in the consumer space.
That's a fascinating comparison. How do you think that plays into their overall market position?
Well, here's the thing. Apple has turned privacy into a competitive advantage at exactly the right time, but Microsoft has its own kind of moat, the enterprise relationships and infrastructure that are incredibly difficult to replicate.
The enterprise versus consumer focus really shapes their strategies, doesn't it?
Absolutely, and let me explain why this is so crucial. When a company runs on Microsoft's cloud and software stack, switching costs are enormous. Apple, while dominant in consumer devices, doesn't have quite the same lock-in effect in enterprise.
Looking at their financial metrics must be fascinating with these different approaches.
Here's something that might surprise you. Microsoft's free cash flow conversion is consistently above 100% of net income, and their return on invested capital stays above 30%. Apple's numbers are strong too, but they're more variable because of their hardware cycles.
That variability really affects how investors value these companies, doesn't it?
It does, and here's why that matters so much. The market tends to reward predictability and stability, especially during uncertain times. Microsoft's subscription-based model provides that predictability, while Apple's hardware-dependent model is inherently more cyclical.
Though Apple's services business is growing impressively, doesn't that help balance things out?
You raise a good point, and let me expand on that. Apple's services segment is growing at double digits and has higher margins than hardware. But here's the catch. Most of these services are still tightly tied to iPhone ownership.
That dependency on hardware sales seems like both a strength and a vulnerability.
Exactly, and here's where it gets really interesting for investors. When you're valuing these companies, you have to consider so many factors beyond just current earnings. You're looking at business model resilience, geopolitical risks, future optionality. It's like putting together a complex puzzle.
The market seems to be placing a premium on predictability right now.
That's right, but let me throw another factor into the mix. What happens when US-China relations improve, or when Apple makes its next breakthrough in hardware? The market leadership battle isn't static, it's constantly evolving based on these external factors.
That dynamic nature of market leadership makes this story so compelling.
And here's what I find most fascinating about all this. We're not just watching two companies compete for market share, we're seeing two different visions of the future of technology play out in real time.
Looking forward to seeing how this competition continues to evolve.
Indeed, and one thing's for certain, this battle for market leadership will continue to teach us valuable lessons about business model resilience, strategic adaptation, and the ever-changing nature of technology markets. And before we wrap up today's episode, let me tell you about something that fuses decades of market expertise with smart technology. It's called Insight One. As a 10-time institutional investor #1 ranked analyst, I built Insight One to take everything I've learned and make it available to every investor. Insight One isn't just another course, it's an adaptive learning platform that turns complex investment analysis into clear, actionable insight. Whether you're new to the field or sharpening your edge, you'll gain the institutional grade tools I've used for decades. You'll find Insight One on the App Store, Google Play, or at theinvestmentanalyst.com. Start your journey today and stay curious.